Ever wonder how money actually moves around the world? It's not just physical cash changing hands. Beneath the surface is a massively complex interconnected system we call the global financial system. It's something that impacts pretty much everyone, even if you don't realize it, and especially here in the US. Let's break down what it is, why it matters, and how it generally works. At its core, the global financial system is a network of institutions, markets, and agreements that facilitate the flow of money between countries. Think of it like the plumbing of the world's economy. It allows businesses to invest, individuals to save, and countries to trade. This system isn't some recent invention. It's evolved over centuries, but its modern form really took shape after World War II. Why should Americans care? Well, consider this. The US dollar is the world's reserve currency. That means it's the most widely held currency by foreign governments and institutions. This gives the US significant economic influence, but it also means events in other countries can directly impact our economy and vice versa. Think about supply chains, international trade, and even things like gas prices. They're all tied to this global system. A financial crisis in one part of the world can quickly spread, as we saw in 2008. Understanding how it works is crucial for understanding the economic forces impacting your life. So how does it actually work? Let's start with the basics. At the heart of the system are banks. Not just your local bank, but central banks like the Federal Reserve in the US, the European Central Bank, and the Bank of Japan. These banks act as lenders to other banks and governments, and they control the money supply within their respective countries. Then you have commercial banks, investment banks, and other financial institutions. They provide services like loans, investments, and currency exchange. All these banks are connected through a network of transactions. Now, imagine a US company wants to buy coffee beans from Brazil. This isn't a simple exchange of dollars for beans. It involves multiple steps and different parts of the system. First, the US company needs to pay the Brazilian coffee farmer. That payment is likely made in US dollars, but the farmer may need Brazilian reais to cover their costs. This is where currency exchange comes in. Banks and currency exchange markets facilitate the conversion of currencies. Let's say the exchange rate is 5 reais to 1 US dollar. The US company gives the bank dollars. The bank converts it to 5 reais, and those reais are then transferred to the coffee farmer. That transfer doesn't happen in a vacuum. It's recorded on various ledgers and databases, ensuring the transaction is legitimate and accounted for. This is where things get complex. These transactions aren't always direct. Often, they involve correspondent banking. Imagine a small bank in Brazil doesn't have a direct relationship with a bank in the US. They might use a larger international bank like JP Morgan Chase or Citigroup as an intermediary. This intermediary bank holds accounts for both the Brazilian bank and the US company, and it facilitates the transfer of funds. Beyond simple transactions, the global financial system also involves the flow of investments. Investors in the US might buy stocks or bonds issued by companies in other countries. This is known as foreign direct investment. Similarly, foreign investors might buy assets in the US. This flow of capital helps to fund economic growth around the world. Stock markets and bond markets are vital components. They provide platforms for buying and selling securities, allowing companies to raise capital and investors to grow their wealth. These markets are interconnected globally, meaning events in one market can quickly impact others. Derivatives are another important, albeit complex, part of the system. These are financial contracts whose value is derived from an underlying asset, like a stock, bond, or commodity. They're used for hedging risk or speculating on future price movements. While they can be beneficial, they can also amplify risk, as seen during the 2008 financial crisis. International organizations like the International Monetary Fund, IMF, and the World Bank also play a crucial role. The IMF provides financial assistance to countries facing economic difficulties, while the World Bank provides funding for development projects. They work to promote global financial stability and reduce poverty. Of course, the system isn't perfect. It's prone to crises, bubbles, and imbalances. Things like excessive debt, speculative bubbles, and a lack of regulation can all contribute to instability. That's why governments and international organizations constantly work to monitor the system and implement safeguards. So to recap, the global financial system is a vast network of institutions and markets that facilitates the flow of money around the world. It allows for international trade, investment, and economic growth. It's powered by banks, stock markets, bond markets, and international organizations. While it's a complex system, understanding its basic principles is crucial for understanding the forces shaping our world economy. It impacts everything from the price of your coffee to the stability of your retirement savings. Remember, this information is for educational purposes only and should not be taken as financial advice. Always consult with a qualified financial professional before making investment decisions.